The next massive support is the 30K level,
where the bulls would probably try to defend would be the bull market support band. And right now, the 20-week SMA is at 36.3K, 21-week EMA is at 37.3K. More or less 36 to 37K.
We kept on hitting support, 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 break. Here's your target. Where would a bounce likely take us?
The spot Bitcoin ETFs have been trading live for about 2 weeks now, and we have seen a sell the news event. The price of Bitcoin has come down quite significantly since that time. It peaked at almost 50,000 over here, and now it's trading about 39,900. Now, how low will these prices go and for how long? We've got to take a look at a few factors. GBTC is the Grayscale Bitcoin Trust. It has been around since 2013, and it was like a roundabout way to buy Bitcoin in your brokerage account. Up until recently, it was a closed-end fund, meaning people could not redeem those Bitcoins. The trust itself had control over whether to buy or sell. As a result, when you traded it, you would either get a discount or a premium to the actual price of Bitcoin. So as you can see here, on a monthly return, Bitcoin is down 8% and the trust GBTC was only down 2.5%. In 6 months, it's up 90%, where in 6 months, Bitcoin is only up 36%. That's because GBTC had a big discount. And the discount was very large, like about 50% a few months ago. And that has quickly closed up, so people were getting that discount arbitrage opportunity. And when GBTC became an ETF, people could finally sell the Bitcoin in there. And now we're seeing tons of outflows. And it's not just normal investors selling, it's big companies that have gone bankrupt, such as FTX. They're selling a lot of it because they're bankrupt and they need all the money they can get to pay back to their clients and to their creditors. Now there's obviously other factors as well, but the GBTC is one of the main factors. And I feel like not a lot of people was talking about how this was a closed-end fund, and when it converted to ETF, people could and probably would withdraw. I feel like not a lot of people talked about this. I've been following this stuff for a while and I did not really hear it one time. Let's take a look at this video clip by CTO as he talks about the GBTC selling.
And that outflow continued, just as I suspected. But there is still a lot of BTC left here, even today. Now this shows a balance of 551,000 BTC. I'm not sure that is completely accurate, but it's very close to what Grayscale themselves write on their homepage, 552,000 BTC. And that is as of 22nd, which was yesterday. We got the pump to almost 50,000, 49,102. Then we got the dump to 40K support. Now that support seems to be breaking. Either that's a fake to flush out all the stops, which no doubt are placed here just below 40K, about where we are now. Then the next massive support is here at 30K. I put it at 30,760, but could be some front running, of course. The only thing I'll perhaps add, which was an idea from another trader, that could happen is this sort of diagonal parabola that could provide some support. I'm not a huge fan of diagonal lines, but the reason I did like that thought is that there are volume peaks here at 37,800 approximately, which coincides with this parabola.
So people are saying a lot of the new ETFs are absorbing this selling pressure. So like Grayscale is selling, but BlackRock and Fidelity, they're kind of buying up the Bitcoin because their ETFs are new. And they can only create and buy Bitcoin to fund those ETFs. But at the end of the day, we're not really close to the halving yet, and there's not another big news event coming up. There's kind of more selling pressure than buying pressure right now. Another thing I think that people are overlooking is that these markets, the stock market in general, is red hot. It's super high. And analysts such as Tom Lee, they're predicting that the markets could fall about 7% in the first half of 2024. Then if the stock markets fall and Grayscale keeps selling and there's not a lot of buying, crypto overall could also fall along with the stock market.
You were Mr. Bull last year. You were right on the mark about everything, and now you're a little more cautious.
Yeah, maybe it's because I skimped on the appetizers.
That's it.
I'm still optimistic for the year, but in the first half, and we got a glimpse of that today with Fed governors talking about not sure how many cuts they want to do. That's going to make markets nervous. And we got a pretty lousy Empire survey reading today, a regional PMI, and that's going to get people worried about a soft landing or hard landing. Those don't get answered for the next 6 months. So I think it's possible that we make a minor new high before the end of the month, and then we might have something like a 7% drawdown.
Tom Lee was one of the only analysts that called 2023 correctly, so I think his opinions do have a little weight in this matter. And if he thinks that there's going to be uncertainty in the market due to Fed rate cuts, and Bitcoin usually tends to follow quantitative easing, then there's something to pay attention here. If we look at past Bitcoin cycles, this weakness in January is something that's kind of always happened. But of course, looking at before does not indicate what's going to happen this cycle, but it could potentially happen again. And I think Ben here illustrates that very well. He's going to talk about the bull market support band and how in Januaries of previous cycles, we've always come down and touched it. And in some cases, we've come down below it. Now let's take a look and he'll tell us what the bull market support band is, and he'll give his analysis on where he thinks the price may be going.
If you're unfamiliar with the bull market support band, it simply consists of the 20-week SMA and the 21-week EMA. It is worthwhile to define SMA and EMA. SMA is a simple moving average. So that's the red line you see on the chart. It is just an average equally weighted of the last 20 weeks. The 21-week EMA, or exponential moving average, is the green line. And that moving average weights more recent price data more than older price data. So the price action from 21 weeks ago, it's a 21-week EMA. The price action from 21 weeks ago is less relevant to the calculation of this moving average than, say, the price action from last week. That's one of the reasons why when you see volatile moves in the market, the 21-week EMA is often quicker to react to it because it weights current price action a lot more than price action that happened, say, 3 to 4 months ago. We have had a mid-January correction. You might say, well, what is it about mid-January that sort of brings this on? And it's kind of interesting because if you go back and look at all prior cases of January, February of the halving year, Bitcoin has had weakness, right? It has fallen back into the bull market support band. Last cycle, you can see that we did that, right? We fell back to the bull market support band in Q1 of the halving year. And yes, we went a lot further below it because we had pandemic, recession, and the Fed printed a lot of money. But even the cycle before that, again, you can see there was weakness. Q1 of the halving year with Bitcoin, and it fell back to the bull market support band. Now it held support. And what's interesting is you go back another cycle, and sure enough, like every single time, mid-January, starts to show some weakness, falls back to the bull market support band. Now, what's interesting is the 100-week SMA, because we've also tested, again, the 100-week SMA around this time frame, either the late part of the pre-halving year or the early phase of the halving year, right? We tested it right here in that cycle just before the halving year arrived. 2 cycles ago, we tested the 100-week SMA in January, February of the halving year. And then last cycle, we tested it. And sure, you can say, well, Ben, we only tested it because of the pandemic. But guys, it's happened every cycle. And we even fell below it. Right? Forget testing it. We went to the 100-week SMA, and then we proceeded to fall another 45% from there.
Now, it's important to note the reason there was a 45% drop was because of COVID, and it was like a black swan event. Who knows if that is going to happen anytime soon? Nobody can predict the black swans. But if there is a recession or a hard landing, then it could go down past a little bit, I would think, past that 100-day moving average.
First of all, we haven't even dropped to the bull market support band. There's no guarantee that we immediately test it. I will say there's some evidence to suggest that we could, but before we get to that, let's look at lower time frames. Let's look at the 4-hour chart. Bitcoin's trying to hold the 40K level for quite a while. We first got above it in December 4th. We tested again December 11th. Right here, we came pretty close to testing it again, December 19th, 18th or so, and now we've tested it again on January 19th. And, if we keep testing it, then eventually we could certainly break through it. if we break, right? If the floodgates are opened and Bitcoin breaks below 40K, then the next level to look at where the bulls would probably try to defend would be the bull market support band. And right now, the 20-week SMA is at 36.3K, 21-week EMA is at 37.3K, more or less 36 to 37K. Between 36 to 37K is still that area, and it's quickly approaching 38K, which is an interesting area because 38K is where we were building up to before we finally had a break above, right? So if we were to fall back into that bull market support band between like 36, 37K, if it happens a couple of weeks from now, it could be 38K. That's where the bulls are gonna want to try to show up and see if they can hold the line.
So that video was from a while ago, and we did in fact started to break down 40K, and now we're approaching the 38K. Here's a video of Gareth Soloway. I feel like he's been calling this pretty accurately, especially the move up to the 50K and then the pull back down. He was calling that. Now, when you listen to these YouTube analysts, you don't want to listen to everything they say. They'll even tell you, don't listen to everything I say. But if you just follow along and see how often they're right, they could be right 50-50, in which case you just turn them off. If they're right like 7 out of 10 times, then you can just pay a little more attention and never really fully buy in. But just follow their track records, see if they're completely crazy. And in this case, he was not completely crazy. Some of his long-term views are actually very bearish, and he called 2023 completely wrong. So keep that in mind when listening to these analysts. They could be right on some little parts short-term, but completely wrong on long-term predictions.
Take a look at Bitcoin. Everything I've predicted on Bitcoin right now is coming up spades here, coming up beautifully. We are approaching my $38,000 target. Remember, this was very simple. The chart had the blow off top right up here, right? We reversed. We then came down. We settled on this beautiful upsloping trend line right through here, all through these levels. Bear flag formation. Remember, I went over those flag patterns in that video. We talked about as long as it's a 45 to 90 degree angle, that's bearish for a move down. Look at that. Picture perfect right there in terms of education. It then broke down, and we are now approaching our next target price coming right back from here. Now, again, once it gets to 38,000 or give or take around 38,000, it now becomes a little bit more intriguing. Can it hold 38? Can it bounce back to 40? That's actually my guess. My guess is we bounce back to 40-ish, maybe low 40s. We then will have to see what happens at that point. Very possibly, and this is how charts work. Remember, here, let's do a little diagram, right? It's support, 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 break. We hit our next support level, and we bounce back to the scene of the crime before continuing down. So if you look at that, we kept on hitting support, 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 break. Here's your target. Where would a bounce likely take us? Back to actually about 43 to 44,000. Now, again, there's no guarantees that happens. It could flush right through 38,000. But again, I go with probabilities. And
so I think that it's possible it's going to keep testing that 38K. And if the markets fall down about the 7%, it's going to come below that, maybe the 36 or 35 thereabouts. But as we go along, for the second half of the year, if the Fed starts cutting these interest rates, generally that is a good sign for risk on assets, and we might end the year on a positive note. Let me know in the comments below what you think of this analysis and what these guys are saying. How low do you think the price will go before a potential recovery? And if you like this content and these clips, give me a like and a subscribe to the channel. Thanks.